Hey guys, it's Brian, and today I want to do a bit of a longer video form review of September because September had a lot of different details about it that I couldn't possibly include in a tweet, and I feel like it would be helpful for a lot of traders to see from the perspective of somebody who's gone through different market cycles and has gone through, a pretty average to mediocre month, I'll admit. And we're going to go ahead and get into the stats and then just explain kind of how this happened, what's the context, and what you can learn from it. Okay, so in September, here are the results. So on the left-hand side, I have September, and then on the right-hand side, I have August, which is my previous result. So the big things to point out here is that in September, overall, 10.55 R on the month after fees, and that's very little. That's something I could make in a day. Some days I had like 17 R, and like you can even see my largest win was 13 R. So basically, I could have had one trade and just walked away and made more money. And then the other thing to note is that I have a lower win rate on not only on executions but also on the overall big picture. So here I have 10 green days, 11 red days, and then I also have this big loss here, minus 22R, which is my biggest loss to date. And I'll go ahead and explain that a bit later. I'll show the trade and what happened and why that happened. But first, I want to go ahead and explain the context. And so basically here in August, big month for me, 162. I think it's near record. In terms of P&L, it was definitely record. I'm not sure about R, but pretty dang good month for me. So I was kind of firing on all cylinders and I was ready to go. I sized up in September and, the market wasn't exactly what would be conducive to my strategy, nor to the amount of size I was trying to push. So liquidity became a big concern. And so we're going to go ahead and talk about more of the context. So yeah, like I said, mindset wise, I was on a streak breaking records every month. This month, I was ready to push myself even further, see how well I can do, and hopefully have an average month, because I know that last month was quite good for me. And even if I took half of that, I would have been happy. So having sized up, I felt like that was an achievable goal. And that's kind of what I set out to achieve. The problem was that it was a bit of a slower month. And of course, slow is a subjective term because for some people, there was lots of large cap plays, Tesla, Nikola, etc. In general, the market in that respect, there were plenty of opportunities. But in my shorting small caps niche, even for longs in general, there was not that much potential. And when there's not much potential in the day and you start scanning for criteria, it goes like, okay, there's no A setup, there's no B setup, maybe there's a C or a D setup, and then you start taking it because you're used to trading so much. This year it's been crazy. And so having gone through all that trading just for this entire year, I knew it was bound to happen. Generally, it happened more in the August, but August was still quite good. It was went through an earnings season, which usually slows down small caps, and also summertime. So I was thinking, hey, you know what? Maybe this summer is not going to be as slow as it was, right? Because prior years, it was like how it is today, but it happened a bit sooner. So because of the timing, I wasn't sure if I should be as aggressive or not, but it just seemed like we were in this bull market where lots of people were getting involved and I was ready to take advantage of it. So lots of volatility. But it was immediately recognizable from the get-go. I mean, first week I did pretty good. Second week it started to slow down. Third week, fourth week, it just was barren. I wake up and I know for sure that I should not be trading, or that some of the patterns are just not there for me, and I still took them anyway. And a lot of that led to unnecessary losses where it was simply better to walk away. And I only managed to walk away once or twice, which is very painful for me, but something that's very necessary to learn. And, I know from last year and the years prior that sometimes you want to take vacation. And normally I would have scheduled hey, I'm going to go travel, I'm going to go do this and that, but it's a pandemic, it's quarantine, so I figured, there's not much I could do, so I'm just going to be here and do my job. Even if I do mediocre, it's okay. So all in all, it was not the best in terms of opportunity, which is fine because that happens. And we did go through 2 market cycles. So there was, the way it works is that kind of there's always one side winning. And I know people are going to disagree with me, but the last person who disagreed with me was trading with $5 risk. It's like you don't have a skin in the game, so I don't think you deserve to be able to talk about it. And whereas I've been trading for a long time now, decent amount of time, I think I'm able to speak on this. Generally, there's times where longs are very happy. Everything is running. There's catalysts, there's sectors, and longs love this, right? This is where they make a lot of money. Shorts generally blow up in this time. Why do they blow up? It's because most of the time these penny stocks are just fading, right? And shorts get aggressive. They start attacking things. They go up, they come down, and it's fairly simple. So shorts get more aggressive. They start winning, but they get blown out by these events. And I think that's what causes shorts to temporarily get out of the game, have to refund or rethink their strategies, take mental capital losses, psychological losses. And that's when longs start to get kind of aggressive also, because they're saying like, hey, this 1,000% runs every day. Let me get on the next one. And then it creates sympathies. Eventually, the longs get a bit too greedy. Companies start taking advantage of the greed and the liquidity, and they start diluting. Longs get bagged long term, and then shorts get back in the game where things start equalizing. Longs, they're taking advantage of longs' anticipation of the next big thing. And so we had one company, and the name escapes me, but it was running because they said they had a subsidiary which is an electronic vehicle, and it's kind of like playing into Tesla and Nikola running. And Tesla had this whole battery day thing, and then this company's like, hey, we have a subsidiary that's an electronic vehicle company. But when you dig deeper into this company, which ran huge percentages, they had no cash, like 2 million cash. How can you run another business? How can you even be a part of that business to begin with? And not only that, but you're like a solar panel business. You last year claimed you were into cannabis. I mean, that doesn't even make sense. They're just taking advantage of the sector hype. So this company was taking advantage of themes in the market and using that to pump their stock a little bit. And people jumped on that. When supply outweighs demand, things are just, when demand outweighs supplies, things will naturally run up. And that created sympathy plays in the next days. And those plays were basically short-lived because the initial reason why those plays were happening was basically unfounded, because the people would call the head of the snake, the lead stock, did not have any substance to it. So what happened was the next day, sympathy runners come up, they spike real quick because people were excited, and then they just faded off. So the longs immediately got bagged off. We had a bit of momentum there, and then that was it, because it's not like some new revelatory kind of move for the company. It's just complete bullshit. So we get those fades, and then momentum dies off a bit more. But the thing that I did is it kind of sparked a little bit of interest in the sector. And so whenever there would be some volume, like some stocks would actually run quite aggressively. And we saw SPI running. That blew up a lot of shorts, I'm sure. And that caused more catalysts like energy to start running. But of course, like energy in general, I'll just say this right now without giving too much context, because I don't want to go too long on this, but energy in general is not that strong of a catalyst. Like, it's not something people get really excited about. It's a lot of companies with a bigger floats and larger institutional ownership, etc. So they're more stable companies that are just downtrending for a long time, and it's not too exciting. It's not like Bitcoin or legalization of weed or something like that. So we had like little market catalysts here and there, but it was not the same volatility that we're used to. Okay. So monthly comparison and themes here. So as you can see, in 2020, I kind of hit my stride here, and I had my personal best month. And then February kind of pulled back. So February would be kind of akin to September, and not in the sense that it was slow, but just in terms of what you can expect as a trader. As a trader, you can't expect an income that is consistent. You get what the market gives you, and you also get based on the performance of yourself. So maybe in February I wasn't performing well. I'm not sure what happened, or maybe there was just not many plays. But you have to accept that even though you're playing out an edge, which is supposedly meant to be profitable, you're going to have times in the market where you're not going to be making money, and you have to be okay with that. So January, February to March, what did I do in March? I did the exact same thing I did in February and January. I did not change anything. So that just goes to show that even when you have a month like this, you just have to live through it, learn as much as you can, and expect that you can't just break records every single day. And so you can see the trends this year where have some good runs, some months are more average, and then June, July, August is just kind of like really, really hot for me. And I took advantage of that. September, unfortunately, is going to fall into the category where I'm not performing as well in terms of results wise, but I felt that the market definitely slowed down to the point where it was less about personal mistakes and more about the market environment. And I mean, of course, there were some things that I could learn, and I'll explain that later. But I just want to give you an example of like how you should learn about how you should approach trading and what kind of mindset it requires, because I think people expect that you're always going to be making money in the market, and that's simply not true. You have to be resilient enough to take a month where you work your ass off and you did the exact same thing and it just didn't work. But I'm not going to change everything I do, because I know over my experience as a trader that it only takes certain times in the market for me to like really hit it out of the park. And it's not wise of me to change what's working. It's just wise of me to play defense until it's time to play offense. And I talk about that in some of my tweets, and I'll link that in the description below. Okay, so here's the trade that actually messed me up. This is Sava, and on the date it says 9:30, but it's actually September 14th, because this is a longer, that's today, but this was the day. And it looks like now that you look at it, it's like, okay, well, parabolic like they always do. But here's like the reason why it caught me off guard is that I was so bored, and it's a really bad reason to trade, but it happens, right? We're all human, and you want to trade every day sometimes. So for me, I'm used to having a lot of trades. So when I was seeing the market just starting to slow down, I was taking so many bad setups. I mean, I was taking setups that you look at it and you're like immediately, oh, gut feeling, this is terrible. But the more you look at it, the more time that passes by, you're like, oh, okay, well, let me just touch it. Let me just dabble in, right? But then you also have the preconceived expectation of your past results. So I was like, oh, okay, I have really good risk reward, etc. In order to justify this trade, I need to take on a tighter risk, and maybe I need to chase a little bit because there's no liquidity, etc. as I sized up. So this is the dumbest thing I did. So after a long time of waiting and just having back and forth days and just slow days in general, I just said, hey, screw it, I'm just going to go for it. So I actually just took a short here, not only on a starter position, but I took like a pretty decent position by just slamming liquidity. Actually, probably took out a couple bids here. There weren't that many, but I took enough for it to be oversized. And what happens is once you have too much size when it's liquid, and I know I shouldn't be getting in at this time, at this ticker, it's pre-market, etc. I still did it anyway because I was bored, and I thought, what if I lose an R or two, it's fine, that's a bad reason, but at this point I'm kind of more numb to losses. I mean, they affect me in terms of if it was a poorly executed trade, and in this case, if I caught it for 1 or 2 hours, I'd be like, what the heck am I doing? But in reality, I know how insignificant it is in the long run, so because I'm always thinking long term, so I just took it. And guess what? This stock, halts right here, and then opens up here. And the problem is when it opens up, it's so illiquid, and the reason why is I'll show you on the daily. So right here, there's a gap fill. So it gapped down here. They had an ATM at the market offering, and then I'm shorting somewhere like in here, right? I'm just like, oh, okay, it's pop and fail, right? It's not a good reason. It wasn't even up that much. There was no volume, etc. It's just a shitty play. I'll admit that, very shitty play. And I would never take that if I wasn't like, if I had another play to take, I would 100% just take it off my screen, right? But because it's just staring me in the eye and I'm bored, I just take it. And so here's the gap fill, which means that there's less liquidity in this range. So as it opens up from the halt, while pre-market, mind you, if I slam out, I'm going to push the price myself. So I'm like shooting myself in the foot. And so that's kind of what happened. So I had to slam out multiple times to get out on the first spike, of course. And that was that. So I took a big loss. And people ask, like, how do you recover from big losses? Well, what I talk about in R. So let's say I take minus 22 R, right? If I have an average risk reward of 5 to 6, in a perfect world, it would take me 4 trades to recover. And so, in the grand scheme of things, it's not too bad. And that's why I always emphasize R, risk of ruin, having a max loss. I didn't fight the trade. I just got halted on. I couldn't do anything about it. And I cut immediately. Some people, they get trapped and they would hold it, try to cover on dips or wait for it to pull back. But look, it has so much potential. And I learned this early on when I blew up my account, that you just don't fight a stock where you got completely destroyed. You just take it for what it was. This could have easily doubled or tripled and been much more difficult for me to overcome and think about. But I also had another trade on this day, which I don't picture. And one of the good things I did was I didn't blame myself for this loss, because number one, it was mostly out of my control. I made the mistake, but I handled it as best I could. I covered as soon as I could, and it halted. Like, what am I going to do? So the other trade I put on, I executed well. I got a 6R win out of that. So even though on the day I took that max loss, at the time it was minus 22R on the day, which is acceptable for me. I took that max loss from this ticker alone. I still executed another trade the same day, the same way I would any other trade, and that reduces that black swan event by 6R. So I come out of the day with minus 17 with fees and stuff like that. Minus 17, I recover that 3-4 trades again. But every little bit helps. And I think the main thing to do is to always judge yourself based on performance and execution rather than your emotion. So it could have been easy for me to just say, oh, fuck this day, and just cut my trade early. The other one, get like 2-3 R's on it. That's a mistake, because every R adds up to the point where that accounts for another mistake. That gives you another opportunity to pull ahead in your month, so that you can take losses and feel confident to recover losses as well. And so having this experience, I know that there was not much I could do about it. I forgive myself and I move on, and I reset the next day. It's the worst loss the entire month. I reset the next day, and a sized up, mind you. So it's very bad. That's the mentality that you need to have as a trader. And that's kind of the mentality that I had this entire month. And that was something that I was really proud of myself for, is that I can reset every day despite something happening so badly, despite something going so poorly for me. And I think that's the resilience you need to have as a trader to make it in the long run of this game. Just brush it off. Take it for what it is. And that's something that the R system kind of affords you, because when some people take a fat loss, they're like, how am I going to make this back? What's my average winner? What's my average loser? And when their average winner is just so inconsequential compared to their loss, that's where they get messed up. The thing about this loss is that I've been preparing for this loss for 2 years since I've blown up. This is a stupid loss. Mind you, it's not like I didn't trade some parabolic runner that went 2,000% intraday, but it was still a big loss in the end. And I always look at my equity curve and I say, what, it's going straight up. When am I going to pull back? When am I going to pull back? And this is one of the situations. You always have to understand that you're going to make a mistake, and it might not be your edge's mistake. It might just be a human personal mistake, and account for that. If in my accounting for my account, with my R as it is and my max daily loss, I could have taken the Sava loss 12 times before I had to refund my account. The prior month you saw my largest loss was 3R. That's slippage, that's halting, whatever. That's me breaking some rules perhaps. But nothing to this magnitude. And so I want you to really think about your risk management and how you can set yourself up systematically to weather the storm. Like, had I taken another massive loss the next day, I still would have been fine. And that's the really, really important key mental factor when it comes to trading that you need to think about. Because once you lose money and you feel like you need to make it back, or you get greedy, or you get fearful, that's when you start making mistakes that has nothing to do with your strategy or your execution. It just starts becoming an emotional problem. And that's what we want to eliminate in our trading as much as possible. Okay, so let's look at the equity curve here. As I was trading, and I put this in my blog, where All Day Faders tweeted one time that your equity curve as a noob is a representation of your knowledge of the game. And then as an advanced trader, it's a representation of your risk management. And so for the longest time, and I'll show you, like, look at this, right? So we have a little bit of a spike here and then fail. But it's more or less holding support, more or less still uptrending. And that's kind of the theme that I've been experiencing as I've worked on myself more and more since I blew up my account. And I'll show you what a logarithmic scale of this chart looks like right now. So look, in the logarithmic scale, you can see more of the details of the journey. And so you can see, like, at the beginning here, and the slide's kind of blocking it, but at the beginning you can see the pullbacks are more dramatic. I mean, I was taking like 50% haircut at the beginning, more than that even at some point, 30%, 20%, etc., just pulling back. And that's not something that I wanted. So I resolved that as a more experienced trader, that I want to make sure that my drawdowns, which I know will happen, are going to be controlled. And so ever since that point, you could see from this point, like up until this point, I was still making those mistakes. But up until here, I hold it. If I ever pull back, I'm kind of holding it and just pushing. And this is no different. It's just on a different point in time, a different scale. So like, even though it looks like this, in terms of my journey, I'm still doing well. And that's what time and experience teaches you, is that you can look at your past results and compare yourself to where you were yesterday and see where you are on your overall journey, how things are shaping up, and where your performance is taking you. So I know at this point, not a big deal. Hey, let's just leave September back. I don't need to think about September anymore. It's done. I take my lessons from it and I move on. And I combine that with my experience of how certain months go. I know that not every month is going to be amazing. Some months you might work your ass off and get nothing. That's fine. Sometimes you might even be red, and I was really close to being red this month. But realistically, does that really matter? I mean, if you're thinking in terms of your overall year, if you're thinking in terms of trading for 5, 10, 20 years, the rest of your life even, it's nothing. And I'm very proud of myself to get to this point. I'm proud that in terms of mentality, I always look at each day as new, each month as new. Even though I'm coming off of kind of a hot streak, the losses hurt me just as bad every single day. I want to maintain my equity. I don't want to give any of it back. And I'm willing to execute in order as my priority, so that when I review my trades, even if I win, whether I win or lose, it doesn't matter what the result was. It matters more about like, how did I execute my plan? And I'll get equally as frustrated as with myself if I don't take my price target, if I chase, if I don't stick to my entry criteria, as I did taking a max loss on a stupid trade of Sava. And so I hope that mentality does help you with understanding how maybe like I would say I'm a professional trader now, how a professional trader thinks. And so here are some of the lessons learned. Big picture, hey, not a big deal. Let's move on. Some months are like that. That's whatever, you know. I'm not going to change anything that got me to this point. I'm just going to change the behavioral aspects. Maybe next year if I see it showing the same signs of slowing down, I will just go back to bed, get some good food, have a walk, whatever, spend time with my family, and it's not a big deal. And I learned that that's quite possibly the best thing I could have done in a lot of these situations, a lot of these days. Silver lining. Even though I'm trading for nothing, basically nothing. I mean, it's something. It's more than, you know. A lot of people would appreciate it, and I should be grateful because it's frankly a lot better than a lot of people work really hard for on a monthly basis. But for me, it's more about results compared to the money. And so while I'm trading, I'm still gaining experience. I'm learning about myself, and that is market tuition. So I would rather pay to play the game and learn than to completely avoid and not give myself the opportunity to make mistakes, because you get better from mistakes. Secondly, I pay locate fees, etc. I can deduct that off my tax return. So it's a business expense where even if I'm breaking even, it's still chipping away at my overall profit. And that's going to be really big come tax time, because I already know that these locates are going to add up huge. And that's something that I'm not really looking forward to, but you know, that is what it is. So there's also that. Okay, I'm going to put my links in the description for the blogs that are helpful for this regard, with understanding how to deal with not slower times, but deal with drawdowns or deal with pain. I know a lot of people have not been performing that well or have taken some hard lessons this month. I know some people did well, but you know, it's been very slow for a lot of people in our sector or in our niche, I would say. And I'm not just saying that from my personal opinion. I talked with a lot of people, and you can just observe it. So if you felt that way, you know, you're not alone. And I wanted to make sure that you understood that even people that you might look up to, or, you know, everyone's going through the same things, and it doesn't really get easier. You just learn to deal with it in different ways. And here's some exciting news. So I have done an interview last weekend, which is quite a big one. It's going to be with Chat with Traders, and I'm not sure when he's going to upload it. He told me sometime soon, maybe early next month, if not, you know, mid next month. And I think that'll be really interesting for a lot of people. It's honestly an honor to be on that podcast, and I hope that he told me that he thought it was a interview worth sharing for a lot of people, and he thought it was quite relatable. So I hopefully you guys look forward to that. And then conclusion, you know, as I trade more and more, I become more jaded to the whole Twitter thing, and I start to come to a couple of realizations is that like people who are very loud and very obnoxious on Twitter generally are not doing that well. And I think a lot of the people who are doing well, a lot of them don't say anything. And when I look at Twitter in general as a tool and what my place is with Twitter, I'm trying to share things that are more practical for people to use. And I'm trying to share my thoughts in a way that is relatable and not only that, but understandable and not some empty words that are blank. And hopefully it helps a lot of people to realize their goals in trading. And I've said a lot of things, and I find myself not wanting to repeat what I'm saying because I've said the same thing over and over again. So I hope that you guys can still use it as a resource. I'm definitely slowing down on it, and hopefully I have different insights. The more, obviously, the better you do in the market, the more you can share. Because the way I see it is that if you're doing well and you have this positive emotion, something positive to share, it's better to share. And you can kind of uplift people with your insight. Whereas if you're not doing that well, people don't really like the embarrassment. I don't like it. I didn't talk about my big loss or whatever. I just kind of dealt with it on my own. And I think that you got to look at Twitter for what it is. A lot of people say they're doing well, and you don't know really what their situation is. And even someone like me, I'm not completely transparent either. But at the end of the day, I think you just want to look at it as a value adding tool. And if people don't add value, if people just make you jealous, if people say things that are useless, you don't need to put that in your sphere of consciousness. Just mute them and do your best as a trader. And because at the end of the day, trading is a long-term game. You want to think big, think far out in the future so that you can make mistakes, learn from those mistakes, treat it as a sport and competition with yourself, and understand that you need time and experience to deal with different market cycles, different months, different drawdowns, and take that with you and just become a more complete trader in the future. So I hope you guys enjoyed this video and that it helps you, for some of you who are struggling or even just people who enjoy the mindset of trading. I hope that you guys can resonate with it. And if you have any questions, just ask me at Brian Lee Trades on Twitter. I will put the links in the description below. And I hope you guys have a good October and close out the month strong, or the year strong. All right, thanks.